Good morning, and welcome to today's webcast, Navigate Total Rewards, Fringe Benefits, and Tax Strategies. Before we begin, I'm going to play a brief housekeeping video.
Welcome and thanks for joining us. Our webcasts are designed to help elevate your business performance. Transform your future for the better with advisory solutions tailored to your vision and supported by our collective technical resources. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget. You can ask our presenter questions during the webcast by typing a question in the Q&A window and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% or 3 of the 4 polling questions, which we'll ask throughout today's presentation. Polling questions will appear within the slide window. To participate in the polls, please click on your answer and be sure to hit the Submit button to record your response. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry, if you can't download your CPE certificate today, we'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our group CPE attendance sheet to receive credit. The attendance sheet is available in our slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit only can be awarded to participants registered as themselves, and isn't available for participants who view the on-demand version. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Before we get started, I wanted to share the big news that Moss Adams and Baker Tilly have joined forces to provide accounting, tax, and advisory services for the middle market. It's really exciting, and you can read more about it on our website via the link in the slide deck and handouts widget. With that, I'm pleased to introduce today's presenters, Brett Addis, Director, Bob Johnson, Managing Director, and Gabriel Sermeno, Director. And with that, I will turn over to Brett to get us started.
Thank you, Talia, and thank you everyone for joining. Am I coming through okay? I was hearing some static on my end. Okay, perfect. Thanks, Talia. Well, I first want to say thank you very much for attending. We've got a great group of people, not me, but Bob and Gabriel, who are going to be talking in just a minute. But we have almost 500 attendees for this session. And so we're going to do a quick introduction, and we're going to dive into some of the content. So I'm Brett Addis. I lead our human capital practice. I am a director at Baker Tilly. Have about 30 some years of human capital and HR background. So really excited today to talk with you about some of the trends and directions that we're seeing from a total rewards and compensation perspective. Bob?
Yes, Bob Johnson. I'm a managing director here at Baker Tilly. My background is in the state and local tax arena. However, over the last 10 to 15 years, the payroll tax consulting side has really intrigued me, especially on the federal side, when you also equate that to the state side, which I often call it 50 states, 50 different playbooks on how they handle these types of benefits. And we're going to discuss it today. Gabe?
Thanks, Bob. Gabe Sermeno. I'm a director here at Baker Tilly, like Bob, with a focus on state and local tax. But with more of a focus on credits and incentives for employers related to job growth and investment.
Awesome. Well, thank you, gentlemen. So let's go ahead and dive into some of the content. So as I mentioned, what was really interesting as I was seeing everyone come online, not only I think do we have over 500 participants, but I've counted somewhere between 15 to 20 different industries. So I bring this up because I do think that, very often we'll go in and we'll talk about compensation trends, or Bob and Gabe will talk about some of the tax trends. And one of the things we hear a lot is this is an industry specific, is this industry specific? And the reality is, I think, as you can see on the call, that no, I mean, this is a topic that is hitting multi-industries. It's becoming more complex and more important as we start looking at how we effectively manage our talent, but also, mitigating risk as it associates with tax. So quick overview of the abstract. I'm not going to read it verbatim. It was in the posting. So, I'm assuming that was compelling enough for you all to join. But I just wanted to kick it off and really just say, this has been such an interesting topic. And I've spoken on this a few times, written a couple articles about the whole dynamics now going on in the overall workforce as it relates to the acquisition, engagement, and retention of talent. And one of the key things that are continuously driving forward is that, the term compensation or total rewards has really flipped up on its head over the last 3 to 5 years. A lot of that has to do with the next generation. A lot of that has to do with people starting to think differently around, wellness and personal lives and more about what's important to them as an employee and what they're trying to get out as they think about a work-life balance. So there's just a lot of things going on that organizations are really, some of them are struggling with, and frankly, some of them are still figuring this out in terms of what are the best ways that we can continue to create a competitive differentiator with our talent. And so today we're going to talk a little bit about some of those perks, some of the industry trends. Bob and Gabe are going to dive into some of the tax implications, but it's just a really fascinating topic. So without further ado, I'm going to jump into our learning objectives really quick, and then we'll dive into the content. So real quick things for the CPE credits is you're here to understand the evolving landscape of total rewards, including non-traditional compensation, elements that enhance talent attraction and retention. Just a real pause on that. When we talk about total rewards, this isn't just compensation. This is looking at all benefits, compensation that an employer is offering to an employee. The second key objective is to identify key tax considerations and compliance challenges associated with incentive programs across multiple different employee classifications. And this continues to surface over and over again as we are in there working with clients to define what are those right total rewards programs, and how do we look at the different employee classifications and what to offer and how to offer and all of these things. And then lastly, really the best practice for internal collaboration when designing tax smart total rewards packages, which is really Bob and Gabe's area of expertise. So let's dive into a couple interesting facts. So one of the things I alluded to during my entrance is that, the total rewards component has really started to shift. And it's in what we're starting to see both from a talent acquisition side, but also engagement and retention, is that employees aren't just chasing large salaries. We're seeing a major shift. For example, the next generation workforce, if you go in and talk to them about retirement, 401ks, all of these other things, incentive plans, equity stock, they don't really care. Their focus is much more on what are you going to be offering from a wellness perspective? What is my work-life balance going to be like? What type of offerings do you have when I work from home? When you get into the kind of what I would call the mid-age bracket of the of the work employees. Again, you are looking at continuously work-life balance. You're looking at things around getting more and more into retirement. And then as you lean towards more of the aging workforce, I guess I could say that myself, Bob, because I have a series of gray strips in my chin. We're really focusing on, hey, we just want to work and ensure that we're prepared for retirement. So we're a really interesting state about how we're starting to structure these total rewards and programs. I think one of the biggest challenges that I'm seeing out of all of this is that, and we'll talk about a couple of these in a minute, is not only the compliance aspect that comes with having all of these different plans and all of these different states, as Bob alluded to earlier, managing the tax implications with those, but it's also the nightmare of managing all of these things. So, so it's great to offer all these things for everybody, but then the reality is that, we have to manage these and really focus on some of the risks. So what I'm going to spend some time in is really talk about a couple, 4 core areas that we're seeing some trends on. And then I'm going to hand it over to Bob and Gabe to really dive into some of those compliance aspects. And if anyone has any questions, there is a Q&A. Oh, thanks, Pamela. Yeah, and if I call your name and you don't want me to, please just tell me not to call your name, but because I often do that. But yeah, if you have any questions, comments, whatever, feel free to throw them in the Q&A and we'll address them as we go through this. So what's talent really want? And so in preparing for this session, we did a lot of research. We as I mentioned earlier, we tried to keep this as broad as we could in terms of industries because we knew that we were going to get several different industries focused on this. And the 4 core things that really popped up was one is the perks arms race. And so this kind of gets back to one of the comments I made a minute ago is that, the new generation of worker is really looking for different things. They're looking for the experience that they're going to get when they go to work. I think post-COVID, you saw a lot more reconstruction of workspaces, ping pong tables, all of these other things because they wanted to go and start mixing work with fun. Whether that's right or wrong, that's not my decision. But they were really looking about the collaboration, the knowledge share, the expertise, the interaction that they had with others, as well as a lot of personalization in terms of what does the organization offer for me holistically, which kind of leads us into the second trend, which is one size fits none. And so, historically, when we think about organizations, think about building compensation packages, benefit packages, we have done I would say a pretty good job, frankly, at trying to create the right benefit structure and compensation structures to really encompass the entire organization. And yes, there's going to be some segmentations, whether it's an executive level, whether it's a leadership level, staff level, et cetera. But we've done this really from the feedback that I've gotten in the research is going back to one of the points I made about, having all these mixed things is about management, right? We really want to create efficiency in how we manage these things and consistency in how we deliver these different programs. But now, again, it's getting flipped up on its head, and people are looking for personalization. They want a much more modular approach in terms of compensation rewards or benefit selections. And so one of the things that we've started to see, which is really, I think, kind of fascinating, is when we build out incentive plans, for example, it's not just about, hey, do you want a long-term incentive plan? Do you want profit sharing? It's offering 4 or 5 of these different elements and working with the employees to determine where best to place these funds or these benefits, this compensation that's right for them. I think one of the big things that you all are probably experiencing as well, and we're hearing a lot about it, is a lot of our younger workforce is struggling to even survive with the amount of debt that they have from student loans. So is that a bucket where we can help organizations could put money in towards student loans versus towards some sort of longer term incentive plan to help offset some of that cost. So a lot of personalization is going on in the market. I think the next one is around the flexibility is currency. So really looking at, the remote working, the stipends you can get from working remotely, looking at the various policies today. One of the things that, again, I would just highlight is that we're seeing a lot that organizations talk about flexibility, organizations talk about remote working, but when you really get down, it's not clear from a policy and procedure perspective. But also, when you think about the policy and procedures, it's what are the stipends, the costs, and things like that employers are putting towards that, and do they really understand the risks, the tax risks associated with making some of those payments? And I know Bob and Gabe are going to talk about that as well. And then the last thing I would just dive into is, talent attraction isn't just about paying more. So one of the themes, if you listen to me on any sessions, you'll hear a lot. I talk about employer value proposition, which is, what's the competitive differentiator that you as an organization are offering to attract new employees, but also carrying that value proposition through from an engagement retention perspective. And this is where I think it's really, really interesting. Those companies who truly differentiate themselves and are now having all of these different personalized packages for different people, we're able to market that effectively. Their talent acquisition is much stronger for someone. And again, I'll give you just a general example is, go look at 5 of your competitors, why you want to work for us, and ask yourself the question based on what you read, would you work there? And the answer is no, then you don't want to be like that website. So there's a lot of really interesting things to think about from a marketing and promotion perspective. But the other piece to this, just to add on, is because I think it's important, is the mission aligned awards, which is, especially now, people are thinking very differently, whether it's culture, whether it's politics, whether it's environmental, all of these other things, and really making sure that that mission-based environment and cultures is included. So I see a couple pings. I'm going to jump down here really quick. Oh, Cecil. You know what, Cecil? I would say that what you're seeing, that is in the news. I'm not saying that that's not completely true. I would still say that, and I'm just answering some of these as we go, but if you look at some of the big tech companies who have announced, hey, we're telling you that you need to come back to work, what they're also not telling you in the news is that if you don't come back to work, you no longer have a place to work. So, yes, I think a lot of them are moving away from remote working. I think now we're also looking at the flip side of that, which is agility, flexibility, and scalability. And so as you look at some of these large employers who are doing that, you're also looking at some of these, I would say, lower enterprise to mid-market companies kind of standing up, because they also, and being way more competitive and growing much quicker because they're able to offer some of these things. I'm not going to tell you whether I think remote working is right or wrong. I think that's a cultural choice, but it's a good point that you're making. All right, so a couple other quick things, and I see some other pings coming in, and sorry about that. The Cecil asked a question. I thought many large companies are moving away from remote work. So a couple things I want to touch on really quickly, and then I'm going to hand it over. So the first is, when we think about the non-traditional perks, there's 3 areas that I want to focus on. One is high impact, high demand. The second are the strong differentiators. And the third is kind of these emerging or niche appeal. From a high impact, high demand, what we're seeing, and Cecil, I don't disagree with your comment, but we are seeing still remote work stipends happening. I would say that I think more of the traditional workforce versus the younger workforce is a little bit more directed to in-office collaboration, interaction. Not saying that the interaction collaboration isn't happening with the younger workforce, but I would say that it's just a different collaboration. So workforce stipends or remote work stipends are still very popular. Organizations are still paying stipends for certain home office supplies, internet, as well as we're seeing an uplift in some of things like co-working spaces, where people can go and either join if they're in a remote location and things like that. Nope, Carrie, we're coming up on polling question in just a couple minutes. Flexibility or unlimited PTO. Freedom is a top driver, as we talked about that for millennials and Gen Z. So I'm not going to boil the ocean there, but just again, really looking at the overall PTO, your leave policies, your flexible working policies is still a main driver today. Interestingly enough, you do need to also take into consideration things like PTO accrual and the tax impacts and the liabilities that some of those will have, which is why you have seen a lot of organizations move to unlimited PTO. The next one around mental health support, again, has been a very major lift over the last couple of years. I think COVID was a great catalyst of this, but we have not seen a slowdown. So individual coaching, digital wellness, things like that have been really big. Two more I'm going to touch on. I'm going to move to the next one. I mentioned student loan repayment assistance. I can't reinforce this one enough. I really feel that this is an area where organizations can step up on, and especially for the younger worker population. I'm not going to go into a lot of the research, but if you really dive into this, most younger workers are really struggling. That's why a lot of them are working from home. They can't, trying them to afford a place to live, plus their loans, plus to live, it's just not working out. So this is a great opportunity and from an acquisition perspective, to really promote a really great program for the younger students. And I would also say the older students from a career development perspective. So I shouldn't say older. Let me say tenured employees from a career development perspective. Rose, I'm going to come back to the question, but Rose asked the question, how does a firm manage an unlimited PTO program? Seems like individuals might abuse it. Rose, I would say based on research, most people actually take less time off when you have an unlimited PTO policy than those people who actually have PTO time. But we'll come back to this one. And then the last thing I wanted to mention on this slide was really just the equity and RSUs levels. This to me is, I personally, I'm kind of undecided on this. One is because of the rationale I made earlier. We're finding the Gen Z, the millennials really have less interest in the long-term retirement. They're looking for quick hits now. However, I do think it's a value add. And in some cases, like tech, it's a really big driver. So, I also think it depends heavily on where the organization is. If you're a startup moving in to something, it might be a fantastic benefit. If you're not, then I would say that it's something that you may want to reconsider and just focus on the more executive level positions. Again, a lot of this comes down to, resources and management. Casey, what are the tax implications when offering student? Oh, we're going to get into that here in just a minute. So strong differentiators, I'm just going to touch on a couple here. As you can imagine, we're seeing a lot of shorter work weeks. I don't know if any of you have started that. For example, at Baker Tilly, we offer kind of like a half day on Friday if permitted. So we're kind of at a 4.5 day where applicable, unless you have certain clients and things like that. The other thing is on pay. So I don't know if any of you explored that. It's a really interesting where you can pay by the hour, you can pay by the day, you can pay by the week. So it's just a different variable method for compensate, making sure that people are paid, especially the ones who can sign up for it. Frankly, has a limited impact on the organization. It's really another time. Some of the other benefits that I would see are strong differentiators. The volunteer time off, again, if you think about mission driven. And then one of the up and comings that I don't know if you've thought about is the dependent education support, which is kind of an interesting where you're starting to offer a bit of loans or stipends towards your spouses or one of your employees' spouses or children or things like that. And then for those of you who are animal lovers, a good pet insurance is always fun to have. Wendy, let me jump. Wendy, is the unlimited PTO more than a professional firm rather than a mixed organization with white and blue collar jobs? Wendy, that's a great question. One of the things that I think you would need to do is really evaluate how an unlimited PTO policy would impact the workforce. When you think about a mixed workforce between white and blue collar jobs, it's a lot more difficult for blue collar workers to just come and go as they please. Not saying that it can't be manageable, but there are going to be business implications that you need to consider. So I would say that this would probably result in a much deeper analysis. I'm getting a bunch of questions, which is fantastic. Let's see. Casey, we'll come back to you. Wendy, is it unlimited PTO? Okay, we talked to Wendy. Do you think banks could ever do a 4-day work week? That's a great question, John. I would actually be interested in others saying that, answering that question if you're in the financial industry. I guess it depends on what you can accomplish in 4 days. CPA questions come in, and are there on-demand pay schemes that involve the organization paying longer than usual, where employee gets a higher pay rate for the time value of money? Are there on-demand pay schemes that involve or is it paying longer than usual? I'm not sure. Let me think about your question, Matthew, and come back to you. I'm going to jump to the next slide because I want to make sure that we give Gabe and Bob enough time. So emerging or niche appeal trends. So some of the things, and again, these you're probably not surprised in this. You may have researched them already. Paid sabbaticals are really popular for executive teams. The internal gigs and job shadowing, not only is it great for internal career development, but also internal mobility, which can lead to greater salaries and things like that from a promotional perspective. And then other ones are employee donation matching, climate conscious benefits, et cetera. So, all right, somebody wanted a poll, and here it comes. So out of the following, which non-traditional perk is part of your current compensation and benefit program? And if there's other ones, just select one so you can get credit, and then you can pop it in the Q&A. Maria, this training will be recorded and shared along with the presentation.
And Brett,
Thank
while
you,
we're waiting for everyone to
Mark answered the
respond.
question about the
Yeah.
Yeah.
Yeah, there's
All
a federal
right.
law that banks can't be closed more than 3 days at a time, so the 4 work week would be tough.
Yeah. All right. So 28% of you said you have flexible PTO, followed by remote work stipends, 4-day work schedules, et cetera, et cetera. So yeah, if there's other things you want to put in the chat, please let me know. Bob, I'm going to hand it over to you to dazzle us.
Thank you, Brett. Great part of your presentation. So I'm going to get in a little more depth about the Fringe benefits. And I 100% agree with what Brett said, that these are becoming a little bit more creative in some senses to attract talent. Especially, I'm going to use in the professional environment here in the CPA world. There tends to be a CPA shortage over the last 10 years, and firms such as Baker Tilly are getting more creative in their Fringe benefit packages to attract those talents. And I foresee, again, I see clients in other realms. Mentioned the banking industry. I've got some in manufacturing that are getting creative in what they're offering, or just increasing some of those benefits in the Fringe benefits aspect to attract those talents. Some of the ones that I see frequently that are most common are the competitive health insurance. That is always a key one for anybody. Brett and I mentioned we got gray. So at our age, it seems to be more necessary than versus someone maybe starting their career. However, ones that have families, such as myself, this is very important to me. I've got a boy that plays football, and it seems like every year he's always hurt some way or another, and we're visiting the doctor. Retirement savings plans. I think this is one, as I talk to clients, especially new staff that are joining companies, it's often overlooked. but it's very important if they start early. Where I see clients are doing a little bit more in this area is increasing the matching percentages and so forth. Brett did a great job on the pay time off. This is becoming a very interesting aspect. The unlimited PTO is a new concept that's been around. I'd say it's been around at least 5 years, maybe a little longer. I could probably spend an afternoon talking about the tax advantages on that from an income tax perspective, from the accruals of those PTO. But I know some employees do not like them because they like to bank it. And then if they would decide to leave, change jobs, whatnot, they sometimes like those payouts. Flexible work arrangements. This has been the biggest one, and the creative one I've seen a lot of activity in the last, really since post-pandemic. I think we as American workforces, businesses have demonstrated that we become adaptable and we're able to work remotely or have flexible work arrangements. I see a lot in this area in the sense of attracting new talent. You've got a company that might be located in state A and needing maybe, I'll use, for example, someone that's a little bit more well-versed in corporate attorney, as a corporate attorney, and they may not be able to find someone locally. And so having a flexible work arrangement, someone that can drive in 1-2 days a week, or maybe work 100% remote, might be more beneficial for them. So again, depending on a way to attract talent, this might be a key one. Professional development. I was fortunate early in my career that I worked for a partner that really pushed this and really wanted the people to continue their career growth by continuing learning. And this is one I'd like to see as I'll go more blue collar discussion here as technology continues to change, that they're staying adaptable in that sense. I've got a son that's very interested in the technology computer side, but he doesn't want to go to college. So he continues reading a lot on this area because he wants to be very skilled for his job. So again, these are just some examples that I see often. Wellness programs. This has become a big one. Really, I think I've seen a lot more activity in this area since the pandemic as well. The mental health support has been key, and we continue kind of developing that. And states are starting to address that as well from a taxation standpoint. Sign-on bonuses. It's always been a common practice to attract talent. Where I've seen some hiccups in this area. I currently have a client that's a big hospital system here in Kansas. And what they often do is when they want to find a doctor or some specialist to come to the system, they might offer that sign-on bonus 1 year before their activities even start at the system. So they haven't even relocated yet. So we have to navigate what the payroll tax rules are on that in both those states. Performance bonuses, incentives. These have been long-standing. But I do see some creative activity in that area. A lot of activity in parental leave and family support over the last couple of years. I think businesses do a good job. Many businesses do a good job in this area. Some states have mandates for this now. Colorado, California, Oregon, Washington come to mind. That as an employer, or it might be employer and employee expense as part of their payroll, that they are funding this, so it's available for employees. Commuter benefits and transportation assistance. For example, I once worked for a firm that they paid for the parking, so that's kind of assistance in there, but it varies depending on the type of job you're doing, et cetera. A common question I get, and in fact, I just answered this question this morning on a taxable fringe benefit. These are some examples, and I can go through each one of those, but I did want to hit on one of them. I think someone asked a question in there about tuition expenses or something like that. I can't remember. I thought I saw one. Health insurance premiums we discussed, they're never taxable. Group life insurance, retirement plan contributions. I saw a question there on the competitive percentages. To answer, Chris, your question, I've seen up as high as 7% anymore. So they'll match up to 7%. Again, it's a company that's trying to attract more talent, and that's one area they're really focused on doing so. Dependent care assistance there has that program, because many of us that are wanting to have children and want to stay in the workforce. Gabe is going to talk about a change in that area a little bit on the OBBA. It's the One Big Beautiful Bill Act. He's going to mention that. There's been a change in that's going to help. The educational assistance. Again, I love this program from employers encouraging employees to continue lifelong learning. Again, it just makes it marketable. My son's actually participating in this, and part of what I often frequently see in this educational assistance realm is they might have a contract if they have to stay for 2 or 3 years after they complete the education assistance. The employer gets to recoup. If not, they have to repay a percentage of it or all of it back. De minimis benefits. Who all has coffee at the office, like small meals, whatnot, snacks, common issue there. I mentioned commuter benefits. I've got a friend that's in Chicago, and one of their benefits is they get to ride the train every day for free. Qualified employee discounts. It's not uncommon anymore that I've got a client that has a contract with T-Mobile, so their employees, and now granted they have about 4,000 employees, they get like a 10 or 15% discount on their call on T-Mobile. So those type of relationships do exist, and I think it's good that they pass it on to the employees. Athletic facilities, you'd be surprised how many times I get questions on this, that if the facilities are often located in the corporate building, you're okay, but if you as an employer start paying for those gym memberships that with our third party, then you're going to run into some other taxable issues there. Taxable fringe benefits, not surprising. Bonuses, you're going to see that one, performance, signing on, holiday. Gift cards, this one has always kind of, I think, been a thorn in some employee side. I remember many years ago, I'm going to show my age, about 20 years ago, I had a client that went out and bought multi-$1,000s worth of, I think they were $100 gift cards, if I remember right. At the Christmas party, started handing them out, not realizing, hey, I just caused a taxable issue for each of those employees. So you got to be very careful with the gift cards. I like them from a spot bonus when someone does something, but you also still have to remember those are a taxable fringe benefit. Company vehicles, I'll be frank, from a taxation standpoint, I hate them. Just because, yes, I understand that from a company perspective, it's from a convenience standpoint, especially as someone that might be on call 24 hours a day, i.e. police officers. But at the same time, if they're ever using them for personal usage, you run into an issue. Like, for example, my son has a teammate. His father is a police officer. You can't tell me that he was on call last night at the football scrimmage. So I always worry that, hey, is there some taxable fringe benefit that needs to be taxed on that? That's not. It could be missed. Gym memberships, I mentioned that earlier. The non-work late travel paid by the employer. What I also see in this sense is like with spouses. So like I'll give you an example. So an employer wins the salesman of the month or salesman of the quarter, and they win a trip to the Bahamas, and they can take a +1. It's all paid for. Well, you might be running into some issues there when the spouse is going on that business travel. Housing allowances. Everyone has the concept that if it's corporate apartment, they're fine, but no, that is not true. Club memberships and so forth, country club, social club, golf memberships is what I often see in this arena. Severance pay. This is a common question I get to, especially when you have someone that might have worked in state A, but before that severance pay is kicked in, they move to a state B, such as Texas, which does not have any state income tax withholding. So you have to navigate some of the challenges there. And again, it's going to be state specific. Employer paid personal expenses. Again, I'm going to caveat this for non-remote jobs or maybe hybrid jobs that you have to be careful with, like home internet, utilities, and so forth. Tickets to sporting events or concerts. That's why you often see that as long as you take a client, it is for business purposes. But if me and my 2 sons go to a game that the firm gives me tickets for, I'm running into a taxable benefit at that point. One key aspect when it comes to these fringe benefits, and hopefully most companies understand this, but you have to have an accountability plan. These accountable plans for fringe benefits purposes are IRS approved reimbursement arrangements. Again, it's always to have it documented internally. Here's 3 key points about the accountable plans. Business connection. Are the expenses related to the business purposes directly related to the employee's job responsibilities? Substantiation. Receipts. Now, I know many businesses have moved that receipt function where it used to be just any expense had to be documented. Now they move up to maybe $50, $75, $100, depending on the expense. So that keeps moving, but it must be documented what that threshold is. And any excess has to be returned on that one. I know there's a lot of questions coming in here, and I apologize I haven't got to them. Someone asked about gift cards. Any amount taxable? Yes, it's kind of like a bonus. So as much as $25 could be subject to it. If an employee lives too far from an office to drive in and the company pays for their flight and hotel to come into the office, is that taxable? As long as that trip is for business purposes, that's traveling to the office. Question came on through, let's see, what are the rules regarding employees using their own cell phones? So that's a good one. I always cringe a little bit when I hear a client says they're providing the cell phones to their. I think a lot of businesses are navigating away from that, but as long as you're paying a percentage of, I should say reimbursing for that percentage of that cell phone bill, that is allowable. I can tell you 25 years ago when I was in the Big Four accounting, I had to sit down every month and highlight each line item was related to business. And then whatever that percentage of overall usage was is what I got reimbursed every month. And granted, that was 25 years ago. Things have changed since then. But I know some companies have policies that they will reimburse a flat rate, $50, $75, again, based on IRS thresholds and so forth. I'll get some of the other questions here in a minute. Here again, I mentioned accountable plans. If you don't have one for expense reimbursements or for these fringe benefits, I highly recommend you draft one so you have it. That way, if there's ever an audit by the IRS or even a state, that you can show, okay, here's our policy and here's our processes for these reimbursements or these fringe benefits. Again, a lot of these are just standard. The travel expenses, so as long as they're business related, mileage reimbursement, business meals, tools, equipment, and supplies, professional license and dues. Are you going to an education seminar that's going to help your career at the current employer? Internet phone costs. Here, we're starting about this one. As long as a portion of it's attributable to business use. I think everyone that's attending this meeting today can probably raise their hand that their cell phone is being used for business uses. We're always connected anymore, whether it's through a phone call or text messages. Like I have clients all the time send me text messages. You available for a call? Or, hey, I have a quick question. Can you respond when you get a chance? And so forth. Relocation expenses. Now, I'm going to be very careful here because there is a change, and Gabe's going to kind of discuss this in his section on this one. But so this is, I'm going to say prior to 2025 on relocation expenses. And again, we still have open tax years under statute of limitations, but there has been some changes in that relocation aspect. There was a chart here. I'm not certain why it's showing up, but I like this from the Society of Human Resource Managers does an employee benefit survey every year. So again, I don't know where the chart is, but it just kind of goes over with everything that I just discussed. All right, polling question number 2. I know everyone's asking for it. Out of the following, which fringe benefits is the most commonly requested from new hires? Flexible work schedules, remote work arrangements, child care reimbursements, wellness programs, or none of the above? All right, we're about 400 people. We'll give you about 15 more seconds or so. 82% of responded. All right, you want to close the poll so we can move on? No, we got a few people. All right, so flexible work schedules, remote work arrangements, and are the top two here. Child care reimbursements, 1.6%, wellness programs, none above. So this is a great lead in for the next section on flexible work schedule, remote work arrangements, because really this is the biggest problematic area for both employers and employees going forward. And I'm going to condense this really quick, so I give Gabe ample time here, is the tax implications associated with the remote work arrangements are just increasing because each state has their own rules. For example, there is a prominent New York court case right now that's still working through. It was a law professor that when his campus shut down in New York, he moved to Connecticut or resided in Connecticut, was doing work, and New York still held that he should have to pay New York withholding taxes on those wages. Well, it's kind of hard to work there when the campus is closed, but it's how the law reads. So you have to be very careful on this one. This is probably the biggest fringe benefit I see a lot of questions for in the last 5 years. Again, you have to worry about the state residency on this one. Where does the employee live? Where's the business located, and so forth? If they're different, it creates an issue from a withholding perspective, state unemployment purposes. You might have a workman's comp issue. I mentioned some states have the paid family medical leave. You have those social causes that some taxes associated with that they have to be careful with. So again, navigating this has become a very large obstacle for a lot of employers. Withholding challenges, again, if you have a 100% remote employee, that's easy to do, in my perspective, for an employer, because all they have to do is register in the state. Now, if you have someone that's a hybrid function, like I just had a question yesterday about during the summer months, it was an Indiana employer, allowed employees to work from home on Mondays and Fridays, but they had to be in office on Tuesday, Wednesday, and Thursday. Well, we determined that some of those employers were resided in Illinois and Kentucky. Well, they were not withholding properly in those two states. So now we're trying to determine, okay, what's the risk? What's the exposure item on that? Deduction expenses. Again, we talked a bit about that already. Again, I apologize. Next is the payroll. What a lot of people don't understand, or employer perspective, is that you have an employee in a state, it could open them up to an income tax, a sales tax, property tax, if they have equipment for the employer owned. You might have the unemployment insurance, workman's comp, I mentioned that, local payroll taxes. Anyone from Ohio, Pennsylvania here on the call or today's webinar, you understand that those are two states, that has locality taxes that you have to navigate. And plus, then we'll navigate monitoring where they're working at, and so forth. So, good here. Compliance reporting. This is money for employers. I'm going to skip this so Gabe has ample time here. Benefits, again, I mentioned this earlier, just making sure they're taxing the fringe benefits properly. So here's a polling question 3. How do you prefer your work to be structured in terms of remote and in-office work? A, fully remote. B, mostly remote. C, hybrid, 50-50 between the two. D, mostly office. Or E, fully in office. And as we're waiting for this poll to close, Gabe is going to handle the next section on some of the changes with the OBBBA that might impact you as an employee or employer. Also discuss with the increased remote or jobs in other states, some tax credit incentives there. So we're going to close a poll here now. We roughly got about 87%, looks like. So, all right. That's a pretty good. I was surprised there. So, Gabe, please take it away, sir.
No, thanks, Bob. Sorry to jump the gun on the next slide. I did want to leave up the results for just another second. But yeah, so, we are seeing that we're getting close to the end of the hour. Want to make sure we get you all your CPE units by getting to that last polling question. So we're going to move relatively quickly through this, but just do be aware that we will be responding to questions that we receive through the chat, follow up via email. So we will get these questions answered to you after the presentation. So as Bob mentioned, it's a mouthful, right? The One Big Beautiful Bill Act, or OB3A, as some of us like to shorthand it, that did provide a lot of tax legislation, and we're going to focus on the parts that relate to fringe benefits. So one of the changes that came through was an update to the dependent care FSA. There's an increase there. Employers can now allow employees to contribute up to $7,500 annually to their dependent care flexible spending accounts. That's an increase up from the prior $5,000 limit for married individuals filing jointly. That increase is to $3,750 from the original limit of $2,500. So that takes place starting in tax year 2026. So anything after tax year 2025, that'll take place. So an improvement there and an increase in the limits for the dependent care FSA. So another fringe benefit that was impacted was under Section 45S, which provides a tax credit for employers who provide family and medical leave to their employees. Now with this legislation, the maximum credit increases from $150K to $500,000 per year. And there's an even higher limit of $600,000 per year for certain qualified small businesses. So, this credit, eligible employers can claim the credit, which is equal to, a percentage of wages paid to qualified employees while they are on family and medical leave. So another improvement to that program, the credit rate increases from 25% to 40% of qualified child care expenditures. For someone like myself who has 2 kids in daycare, this is something that, looking forward to taking advantage of. Qualified expenses are now expanded a bit to include amounts paid under contract with third-party providers that arrange childcare services, as well as facilities that employers might jointly own or operate with other entities. This takes place even sooner. It takes place in 2025. So that's a benefit that we can start taking account of in this tax year. More expanded benefits under OBA or OB3A. We talked about this earlier. It expands the employer student loan repayment benefit. Now employers can provide contributions up to $5,200.50. And that is now permanent. Beginning in 2026, this cap will be indexed for inflation. So you can start to plan your employee benefits a little more, knowing that this cap will be increased going forward. I did see a question is, how is this accounted for? From an employee standpoint, it's not going to be taxable as income. So that is an improvement that is now permanent. From an employer standpoint, I don't believe you can account for it as an expense. I would have to double check and get back, but do know that it needs to be an approved plan under Section 127. So that's something as an employer, it's something that you have to document and create a plan in order to be eligible for this benefit. Paid family medical leave under Section 45F, employers can now claim the credit, not just for wages paid to employees on leave, but for the premiums paid or incurred for that insurance, even if the employees are not actually taking leave. So, there's other improvements to it, but that's kind of the most significant one. You don't have to be employed for a year anymore. It's reduced to 6 months, and the credit can now be taken by employees who work at least 20 hours a week. So that becomes effective in 2026. Some other benefits. New dependent savings accounts, Trump accounts. These were highly publicized accounts to help start planning for, children's, making money in the stock market, right? Kind of like, your 529 accounts, similar to that. So for children born between 2025 and 2028, the federal government's going to plant a seed account and with $1,000 per child, and employers can contribute up to $2,500 annually for these accounts. And the children, once they turn 18, they can access the funds that have accrued over that time. I know Bill mentioned changes to moving expenses earlier on. So now moving expenses are permanently includable in income of employees and not deductible. That was a big change under the OB3A. There is a provision that exempts certain members of the armed forces and intelligence community, but moving expenses are not going to be excludable for employees' income. That also takes place starting effective in 2026. Getting to the final pulley question, this one's pretty straightforward. Do any of these changes described going to impact your employees or any of your plans? I think we can leave that open as I kind of quickly jump to the next section, the last section. I think I left it open. A couple of incentives to consider. So Bob and Brett both mentioned that, these are significant. These fringe benefits, employee benefits can be a significant cost. We're going to talk about really quickly some ways to reduce costs through some employer incentives that are available to companies who are expanding and hiring. Just really quick background, federal, state, and local governments will offer business incentives to encourage companies to hire, expand. It can be creating new jobs. It can be, increased wages. They provide these incentives to help companies who are increasing or participating in these types of activities. If it's skilled training programs, if you're hiring certain people from certain backgrounds that had historically had a barrier to employment, there's programs there. We're not going to get into the details of them, but just understand that there are tax credits available at the federal, state, and local level. I think a very popular one at the federal level is the Work Opportunity Tax Credit, the WOTC program. That is a program that provides, a general business tax credit for employers who hire folks from certain backgrounds. There can be state and local grants. If you're expanding in a certain state or local jurisdiction, there can be funds available to help you with your expansion. There can be payroll tax relief, training grants, training programs, training subsidies. Many states and local jurisdictions offer training programs, whether it's collaboration with a local college or even just, direct grant payments to help implement training programs for employee development. Some things to consider when reviewing these types of incentives. Many are statutory by right. You can just, consult your tax advisor and see, hey, we're in this state, we're hiring. Are there any credits available? They should be able to help you identify what credits are available. Make sure you're taking advantage of them. Oftentimes, our clients are already performing activities and hiring folks that meet these eligibility requirements. And so it's just a matter of collecting that information and getting it on a tax return. So I know we talked about remote employees. That can be, these programs can apply to remote employees. Typically, they don't need to be at a certain location, but they need to be in the same state that you are taking the credit in. No state's going to give you a credit for an employee that doesn't work in that state. So there's also, reporting requirements associated with these. Just some considerations to look at when you're looking at these incentive programs, because they do vary by state, by jurisdiction, and they can be pretty significant and helpful in terms of the amount, but they do come with requirements and compliance reporting. So I think we're done with that. I know we are at time, so we don't have time for questions necessarily, but we are tracking them in the chat, and we can respond to them after the presentation's over. Thank you for your time.
Awesome. Thank you, Brett, Bob, and Gabe for a great presentation today. If we didn't have time to answer your questions, we will do our best to follow up with you after the webcast. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window. If you participated as an individual and met all requirements, your certificate is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy of your CPE certificate will be emailed within 3 weeks, should you have any difficulty downloading it now. Here's a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Please also visit mossadams.com for future webcasts and other resources to help elevate your performance. Thank you for joining us, and we hope you'll join us again next time.